All right, guys. Let us go. Good evening, whatever part of the world you are tuning in from. Hopefully it's not as hot where you are as it is here. All right, let's do this. Hello, everybody. How are you doing? Good evening. Good evening. Good evening. It is Tuesday evening, so we are one day and a bit into the true trading week. It's been an interesting day so far for me. Quite a painful day. I had a trade. You can see it on the screen. Closed it for pretty much even because the market was fluctuating. Went about my day, came back, and boom. But it happens. It happens. So missed out on it hasn't hit the target I was going for yet. That would happen to be down there. The original stop loss was above this high. So all told, if it does get there tomorrow, that would be a 421. But capital preservation is the name of the game, as I've told you guys several times. And so I'm not sweating it. There'll be other opportunities. So how are you guys doing? What have you been trading or analyzing? Welcome, Natalia, Esther, Gerald, everybody else. Come on in. What's your day been like? What have you been trading? What's your day been like outside the markets? Let me know in the comment section as we get started. Also, thank you everybody who's been a part of this channel. Like I said yesterday on the broadcast, this started out just as a place to store videos that I was producing for my students at the time. Our training program was free. It no longer is, but it's still great value. And it's morphed into a full-fledged YouTube channel. Who would have thunk it? So thank you to everybody who's subscribed, who's been a part of it so far. Now that we are treating it as a proper YouTube channel, we're trying to get to 1,000 subscribers in the next month. Okay, cool. Good to know you're doing well, everybody. And so we're asking that you would like, share, subscribe, engage with the channel, whether or not you're a student, even if for those of you who just get the content for free. Share it with every single person you know who is interested in trading or, has a theme for trading. And they will thank you for it. Alrighty. Good. So, just learning. Gerard, is it okay to put that up on the screen? Do you mind? Because I think people can learn from that. Just learning trading psychology and nursing wounds from losses due to amateur trading mistakes. Like I said, every trader will make stupid mistakes. I pray for you, you make them on a demo account. This is the time to make all the mistakes in the world. Make them now. Get them out your system. Cry over fake money. For instance, one of the reasons why I was quick to pull this trade at zero because it started here, it ran away. When it came back was I was trading live money. Trading thousands of live money. And so I wasn't going to sit through to figure out what was going on. So make the mistakes in your demo account, get it out your system. But also realize this. You will lose as a trader. Right? Just deal with it. If you're looking for 100% business, this is not it. No matter how great you are, no matter how technically proficient you are, no matter how disciplined you are, no matter how great your psychology is, you will lose. And the question is, what will you do when you lose? What will you choose to do when you lose? Right, so today we're going to be dealing with market sessions. Now, it's one of those things that I have addressed in quite some detail as part of some of our other videos, of our other webinar sessions, or 1 second, there is a class. 1 second. Oh, someone's asking me a question. Give me a quick second. Let me get at this. Move this out the way. Yep, there is a class. Quick second. We are on now. One of our students is finding out if we have a class. Yep, I'm letting them know we are on as we speak. I'm taking a send. Cool. Right, so back. One quick second. Give me a quick second. Right. Okie dokie. So, let's get back to it here. When do you trade? That's the $1 million question for today. Are there specific times when the market does specific things? The answer is an overwhelming yes. I can't say that enough. The answer is an overwhelming yes. The Forex market is very, very, very unique in that of all the trading market, and there is some of this in every other asset class. You can find it in stocks, in shares, in futures, in bonds, in crypto, whatever. But even more so, it is amplified in foreign exchange, that certain periods of time during the day are consistently, or can be consistently, expected to move and act a certain way. Right? So, if you understand that, you can incorporate that high probability of what price will do into your trading approach for success. And I have spoken about this. We've looked at it in many of our videos, but I realized that we hadn't done a specific video or set of videos on it in black and white. And so that's what we're going to do today. So a lot of the stuff that we've mentioned in videos here and there, we're going to pull them together into a concise place where you can look through them. So for the registered students, you'll also get this in the Market Breakers course. It's part of your pre-recorded content. It's all right, Kieran. It's part of your pre-recorded content. So, but this, like all the other VIP webinar sessions, are not designed to so much as teach it theoretically as to show you practically how to apply it. So, I am going to do some things today, or show you some things today that will challenge your traditional approach to the market in terms of time. But as you mature as a trader, you will look back and think, wow, that was spot on. And in fact, you don't need to mature too far. It'll become apparent real quick when you look back at the way the markets move as to why I am challenging these quote unquote traditional approaches. Now remember, we're trading a chart of price against time. The market is dominated by individuals. We call them market makers, banks, large hedge funds. They're whales. They're trading billions of orders. They move the markets. We do not. We just follow on with what they are doing. Right? Cool. So, also, we've established the fact that the markets are driven primarily by algorithms or pre-programmed quote-unquote artificial intelligence. Every computer program requires variables. And if we are dealing with a program that is designed to deliver price against time, the two most important variables are price and time. And we spent the last few months talking specifically about price, key levels, institutional levels, highs, lows, liquidity profiles, market structure breaks, stop hunts, all Fibonacci levels, candlesticks, discount, premium. These are all concepts of price. If you look at it that way, everything we've been teaching has been talking about price in the last few weeks. Now, we want to start to look at time. Time is the second variable in the trading equation. And let's get rid of these. Certain times of every significant period are important. I'm going to repeat. Certain times of every significant period are important. What do I refer to as significant periods? I'm talking about the time frames that market makers trade. Remember, they're position traders, meaning they are almost exclusively concerned with the monthly, the weekly, and the daily charts. You remember that, right? A market maker very seldom, but once in a while, will confer with a 4-hour chart. And that's about it. They are not scalpers. They're not trading hours or 30 minutes, and definitely not the 5-minute or the 1-minute tick charts. They're making their decisions primarily of 3 charts: the daily, the weekly, and the monthly. This becomes extremely important when we begin to analyze the time factor in the trading equation. What it means is there are certain times of the year. Why? Because a daily divider is a year. There's certain times of the year, week, day, and sometimes sessions. And that's where the 4-hour chart comes in, because each 4-hour candle is pretty much the chunk of a trading session. Think of it this way. If I say, for instance, take orders between 6 and 10, that's 4 hours. 12 and 3 is 3 hours, but that's almost 4. Midnight to 5 a.m., which is Asia, is 5 hours. Again, that's almost 4. So 4-hour candles pretty much represent session blocks. Daily candles obviously represent a day. Weekly candles a week. Monthly candles a month. And the monthly divider a year. For instance, the same concept that we have talked about, right? That on an up day, you would expect price to open. One second. On an up day, you would expect price to open, find support beneath the open, rally to a high, find resistance, and then close slightly further down from the high. On a down day, you would expect the opposite. Price to open, rally to a high, find resistance, come down to a low, find support, and then close back off that low. The same concept works with a week. On an up week, you would expect price to open, come down, find support, rally to find resistance, and then close down from the high of the week. On a down week, you would expect the exact opposite. You would expect price to open up, rally to find resistance, drop down to find support, and then close up. The same thing on a month. On an up month, you would expect price to drop down, more often than not, find support, rally to a resistance, and then close down. The same concept you can see with a year. Same thing. You expect the year to open up on a down year, find the high, add a resistance, come down, find support. It works on every time frame. It's like clockwork. Now, it is less clockwork the higher you go. So for instance, for a year, there are times where, or a month specifically, sorry, there are times where that rule may be violated. But still, 7 times out of 10 at least, you will find it work the exact same way. Therefore, if you can divide a year or month or a day or even a session into smaller blocks of time and study how they repeat with precision, you might have found yourself a gold mine. Now, when I talk about market sessions in this, it's going to be a 3 video series today and another 2. I'm going to be dealing specifically with the intraday sessions, dividing a trading day into different blocks of time. This will really bring some stuff to life with the concepts that you've been learning. So, first of all, let's deal with the traditional stuff that is correct. There are 4 primary trading sessions in the Forex market. It's been this way for a long time, and it will continue to be. And in fact, you know what? Let me give you a sneak peek at some of the material from the Market Breakers course module. Let's just find this real quick. Open recent. There we go. Just find this for you real quick. I was going to write it up on the charts as usual, but I already have this written out, so why reinvent the wheel? Right. Okay. There we go. I'm just going to pop this up here so y'all can see it. Cool. So, sneak peek. Retail traders are by nature flexible in their trading and are fairly evenly dispersed around the world. But remember the commercial entities we've spoken about, the market makers, right? Well, a market maker is almost without exception an institution, a bank or a company. Therefore, what to you and I may be a flexible hobby or even a full-time business that we do around our schedule, they have defined office hours. So those institutional traders are going to be trading at certain times of the day based on office hours in their city, right? So the 4 major centers in the global Forex, and each has its own session. Let's look at them real quick. Sydney, Tokyo, London, and New York. This is traditional knowledge. This is older than many of us on this line, many of you on the line right now. You're going to hear these 4 names. And sometimes Tokyo is just referred to as Asia, and I'm going to show you why in a second. They're called sessions. And pretty much the 9 to 5 normal working hours of each of these 4 cities translates to a significant trading session. I'm going to skip through all the fluff here. Now, Sydney 1 is the smallest of the 4. Kieran, why are you going few? Sydney is the smallest of the 4. And it mirrors Tokyo a little bit. And so usually we just refer to it as Asia. So technically we have 3. The Asian session, also called the Tokyo session, 20% of all daily volume occurs there. The European session, aka the London session, 45% of all trading volume occurs there. And the American session, or the New York session, has 18%. Now, if you add 45 to 18, you will get 63. Okay, I get you, Kieran. You get 63. 63 plus 20 is 83. So, between these 3 sessions alone, not counting Sydney, over 80% of all daily transactions by volume occur. This is going to lead to the 2 words you've heard several times: volatility and liquidity. In essence, during these sessions, you're going to have high levels of volatility, meaning price is going to move, because when you're trading, you want volatility. What do I mean by volatility? For those of you who didn't watch that video, it's the measure of how far price moves in a certain period of time. So today, or this particular day here, price moved 130 pips in one day. In the next day here, it only moved 65 pips. So this day here, Friday, was twice as volatile as this day here, Monday. 130 pips in one day, 65 pips in one day. So this was twice as volatile as this day. We've dealt with that already. And of course, you know what liquidity is. Areas of a chart where you know people would have put orders. Market makers are position traders. They can't just jump in and out like you and I. They need large levels of liquidity to fill their orders and pair their orders. And so they are going to be moving, or should I say, their movements are going to generate volatility and are going to be targeted towards liquidity. And therefore, you as a retail trader want to be trading at these times. That's the simple foundation behind it. This is when the big boys are moving. This is when you want to move. Outside these times, the market's going to be dead. And even in some of these times, as we'll see, there's times within these times where the market will be dead as well. Right. So, of course, we need to establish some time conventions. The Earth is divided into 24 different time zones, starting from the NUT on the left hemisphere to the WFT on the western hemisphere. In essence, when it's right now, it's what time is it here? It is 9:41 p.m. here in London. That means it will be 4:41 in the afternoon in New York. And in Tokyo, let's see, what's the time in Tokyo right now? Right now in Tokyo, it'll be 5:42 a.m. in the morning in Tokyo. So right now in Tokyo, people are waking up and getting ready for work. In the US, you guys are either finishing work and coming home if you're on the East Coast, or you might be taking your lunch break if you're on the West Coast. And in London, we're getting ready to sleep. In Tokyo, they're getting ready for work. And in Australia, they're already at work. Because Forex is a 24/7 market, this can be confusing. Of course, if you're trading a stock exchange, whatever the times 9 to 5 is in that country, that stock exchange will be open. In Forex, there will always be a market open anytime from Monday to Friday night, and then back open on Sunday night. So there's 3 ways we quantify time. The first is GMT. What's the time at GMT, Greenwich Mean Time? The second is what's the time in New York, Eastern Standard Time. And the third is what's the time in London. Why? GMT makes perfect sense. It's the International Time, Central Time Convention. However, and I am not going to teach this here on YouTube for free, But for those of you who are part of the Market Breakers course and the paid program, we're going to show you that there's certain things the market does almost every day that are as a result of the behavior of the institutional traders in either New York or London. There's certain quirks to the market that are generated by what's being done in New York or London. And so when you are looking for those things, you need to know what the time is in New York or in London, because New York and London both move their times across by 1 hour forward and backwards for daylight saving. So I can't just tell you, we can't just tell ourselves it's this time GMT, because it'll be this time GMT half of the year and another time GMT for the other half of the year. So for those quirks, you need to know what's the time in London right now to figure that concept out, or what's the time in New York right now to figure that concept out. Right. So this is explaining why we use New York and London. It's all there on the screen. Certain patterns and triggers and signals which consistently repeat almost daily in the markets. They're almost exclusively tied to one or the other of the London, New York sessions. So it's best to track them using the time in that specific city. So I've just explained that. Right, so Sydney, financial capital of Australia. Australia is the largest economy in Oceania. That's Australia, New Zealand, and the South Pacific Islands. It's also the furthest region to the east of the central latitude. That's Oceania as a continent. So technically, the Forex day starts here. Now, technically, it starts in Auckland because New Zealand is 2 hours ahead of Sydney. But since Sydney is the clearinghouse, and that's a word you might want to understand. For those of you who want to really understand economics beyond just trading a chart, a clearinghouse is something you want to go Google, but it literally is a center or an institution that serves as the primary intermediary of transactions for a region. Sydney is the clearinghouse of Oceania, so that trading session is named after Sydney, even though it starts in New Zealand, in Auckland. Like I said, most of us traders don't really pay too much respect to the Sydney session. It's the least volatile. It has the least volume exclusively traded in it. It's also almost exclusively engulfed by one of the other three. In essence, almost 80% of the Sydney session also ties in with one of the other three sessions. So we're not going to pay too much more attention to it. It's just for you to know what it is. It starts at 8 a.m. in Auckland, which is 6 a.m. in Sydney. Most importantly, 8 p.m. to 5 a.m. GMT. So, right now, 1 second, the Sydney time session, or Sydney trading session, is already in operation. And in video 2 or 3, we're going to show you something very important that happens when Sydney starts. It's an indicator you've seen on my chart for those of you who've been with me for a while, but I haven't explained to you what it does yet. That starts when Sydney starts, you don't want to be trading. However, the market starts doing something the minute Sydney starts that you want to observe and track, because while you shouldn't be taking a trade in it, it is very key to tell you what trade to take when. Let's go to our chart for a second. You see these blue lines? Let's put this in. Let's put this on a 15-minute chart. You see those blue lines on my chart? That's when Sydney starts. And you can see every day on my chart, I have an indicator that tells me when Sydney is in operation. It is almost exclusively always a consolidation. Also, let me show you something real quick. If I put in my KPI indicator, it tells me a couple of things. when the next candle will open, what the spread is. Sometime between 8 p.m. GMT and midnight GMT every single day, you will notice that on most European pairs, the spread becomes crazy. It will go up to sometimes 6 to 10 pips. Someone doesn't want you trading in the market at those times. Right now, it's gone down now. Someone doesn't want you in the market at those times. Why? Because they're doing something. Market makers use Sydney as a consolidation to hold price in a range to make up their mind what they're going to do tomorrow. Everything, let me show you what I mean. Everything that happens here is predetermined here. See this small section of price action there? Everything that happens on this side of the line, and you guys will see it over the next year, the students, it'll blow your mind. Everything that happens on this side of the line takes place or is dealt with there. Now, we're going to look at this in a little while. The orange lines are quote unquote what I call, what several other traders, I didn't invent the word or the phrase, called the Asian range. Remember, we've said that on a down day, for instance, we want price to open up, go above the daily open, and preferably go above Asia. There are some days it doesn't need to get to above Asia. However, we do want to see it open up and go above this range. This is called Sydney Open. The first 4 hours of the Sydney session are called the Sydney Open. Also, let me address that as well. The first 4 hours and the last 3 hours of every session, I am personally going to refer to as the open or the close. So if I say London Open, I mean the first 4 hours of London. If I say New York Open, I mean the first 3 to 4, depends on which one. The first 3 to 4 hours of New York. If I say London Close, I mean the last 3 to 4 hours of London. And if I say New York Close, I mean the last 3 to 4 hours of New York, the sessions. This period here is called the Sydney Open. 4 hours from 8 p.m. to midnight GMT, based on whatever the GMT hours is, based on what's happening in New Zealand or Australia in Sydney. I'll leave that. What else? It's also called something else, but that's beyond the scope of today's class. That will be for the registered students. So that's Sydney. We're not going to trade it, but we're going to use it significantly to figure out what we're going to do for the rest of the day. And it ends at 5 a.m. GMT. Now, of course, remember to convert that into London and New York time, depending on what time of the year it is. Now, the next one is Tokyo. It's the political and financial capital of Japan, which until the last 25 to 30 years was the biggest economy in Asia. It's been overtaken by China. It used to be the clearinghouse of Asia. That is technically now Singapore and Hong Kong is where the highest amount of Forex volume is traded out of. But it's still given the sentimental respect as Asia's clearinghouse. So we call this session Tokyo. Now, London is also called Europe. New York is also called American. But Tokyo is more referred to as Asian than the others because there are so many different countries in Asia that contribute to the Asian session, Asian trading volume. Tokyo is not the majority any longer. So, most traders in the know. Oh yeah, Kieran, yeah, it is. Yep, Kieran, it is, and you're going to get it tomorrow. Right, so Asia is critical to understand the price action. Asia, let me repeat, is absolutely critical. I cannot repeat that often enough. Asia is critical. Absolutely critical. If you do not understand how the Asian session works, do not attempt to be a day trader. Be a swing trader, be an intra-week trader. You cannot successfully trade intraday if you don't understand what Asia is doing. I can't say that enough. You cannot. Okay, I'll leave that alone. I will leave that alone for now. Cool. So this is wrong. Let me correct this. Let me correct that. That should say that was a typo. 1 second. So that should say midnight 12. Is that AM or PM now? I think it's AM. Is it AM or PM now? Is midnight? Is 12 midnight AM or PM? Asking for a friend. It's 12 midnight AM or PM. I think I'm just going to put 12 midnight just to be on the safe side. I think 12 midnight is AM, isn't it? Right? Let me see. Type on line 5. Where's line 5? Yep. Thank you, Kieran. Spotted that as well. So, I think midnight is AM. If I'm wrong, please correct me. And this here. 1 second. Should say 9 AM. So 12 AM to 9 AM GMT. To be on the safe side, let me just put in bracket midnight just in case I'm wrong. I need to go check that. Cool. So AM. Cool. So I'm right. Thanks, Kieran. Yes, Esther, I'm asking for a friend. So Asia is critical. Right? Absolutely critical. Again, if you come to my chart, like I told you, this yellow line here is designed to show me the Asian Open. Asian Open being midnight to 5 AM GMT. Now, I have adjusted this chart because this broker has a server that's 2 hours ahead of GMT. But I've adjusted it to start at midnight on the chart, not to confuse you. Now, for those of you who are trading, you would find your broker's time adjusted from GMT and adjust your indicators if you're using them, or the manual lines you're drawing based on it. So technically, if I were to adjust this would start at 2 AM. But I've left it here just so it's not confusing to you in the video. That Sydney Open is 8 PM to midnight. And notice, Tokyo starts at midnight to 5 AM. That's why those two lines are on my chart. Now, unless you are trading a pair that has an Asian range currency. So what are the Asian range currencies? The currencies, so let's go back to that PowerPoint here. What parts of the world will have their 9 to 5 between midnight and 9 a.m. GMT? That's the question. Because as a rule of thumb, you only trade a currency when the country or pair, when at least one of the currencies in that pair is currently awake in office hours. Let me repeat that. You only have business trading a currency pair if at least one half of that pair has its traders awake at that location in the world. And for best results, you want both awake, but at least one. And so, whatever you're trading, stay out of the markets in Sydney. Just stay out of the markets in Sydney. Sydney open between 8 p.m. and midnight GMT. Just, if you're in a trade, leave it alone. Because sometimes you see some wild spreads anyway. That's why I like to get out the markets just before 8 p.m. At worst. Usually I'm up by 7. London close. Now, if you're trading a currency whose traders will be awake during the Asian Open, the first 4 to 5 hours of Asia, by all means, trade that pair. See what I'm talking about? Look at, can you guys see what's happening to the spread? 6.2, 6.4. Can you see that? Look at this side of my screen. I wish I could blow it up, but I can't expand this any bigger. But that there is a 6.4 pip spread. Why would you want to trade with a 6.4 pip spread? It's now 6.1. And it's happening round about midnight. Just as... Now, I know it looks like... Remember, it's 8 p.m. Let me adjust this to show you what I mean. So, this here would be the Sydney Open range. It's supposed to be 8 p.m. server time, 8 p.m. GMT. 8 p.m. GMT would be 10 p.m. server time for me. Again, I'm going to broaden it out for the students. I'm going to adjust that time for you to be more specific, but just to understand it in terms of a session to midnight. And then I would need, so that's from here to there. And then I would need the next 2 hours from midnight into 2 a.m. my time. So I'm going to insert the same indicator twice. This is an indicator designed by a mentor of mine who I learned a lot from in the early days of my journey. So shout out to him. Right, so in essence, from here, starts here and ends here. And somewhere in between there, usually just before midnight and just after, usually just around this time, 10 p.m., which is midnight server time. But around this time, you see all kinds of gyrations going on. Just stay out. I'm not going to explain to you today on this class. The big boys are doing some business. Just stay away. So, the first 5 hours of Asia, again, if we are to be pedantic and adjust that based on this broker server, it's midnight our time, so that would be 2 a.m. server time to 5 a.m. our time. That would be 7 a.m. server time. So this is technically the ranges. Yes, Kieran, you do. You will see that on the non-Asian range pairs, and by Asian range pairs, I mean, let me write what I mean by the Asian range pairs. By the Asian range pairs, first of all, I only trade majors. So I don't trade the exotics. I only trade the majors and sometimes the major crosses, the 8 biggest currencies against each other. So we're looking at the Jappy, the Aussie, and the New Zealand, or the Swiss, or the Kiwi, sorry. Any currency pair that does not have one of these 3 currencies in it, you have no business trading during Asia. Because again, with some notable exceptions like Friday here, it will be a tight consolidation range. And we know as smart money traders, we know as professional traders, as market breaking traders, that consolidations are periods of time where market makers begin to engineer a move. For a market maker, the period, the day, the week, the month, the session starts with a consolidation and ends with a consolidation. Yeah, the Kiwi. Sorry, NZD. You're right. Thank you. Thank you for spotting that. There we go. Thanks for spotting that. So, again, unless you're trading one of those pairs, stay away. And use those ranges as consolidation markers to help you plan your trading day. So for instance, on an up day, I want price to open up. I want it to find me a low beneath the Sydney Open and beneath the Asian low. Definitely beneath one of the 2 of them, and take a long. So here. On a down day, the opposite. So I'm not trading doing them. I'm using them, and I'm going to teach you how to use them a lot more in depth over the next few months. But I'm using them as markers. I'm not trading within them. However, if you are trading a pair, let's find one. Let's open one that does have an Asian currency or an oceanic currency in it, e.g., the Aussie dollar. You will see that there are significant moves that do happen in Asia. Why? Because the people who are using the currency in their normal daily trading life are awake. And so you see that the Asian ranges are a lot bigger. They trend a lot more as opposed to just being consolidations. And what's what I'm looking for now? And a lot more happens within them. That's why I don't like to trade them. I put Aussie dollar, Kiwi dollar, or the Jappy on my watch list as a last resort. If I can't find a third European or North American exclusive pair, because half of the time I will wake up in the morning and it's already done something significant that I wasn't able to capture. But if this is the only time of the day where you can trade, if you want to be an intraday trader, if you don't want to be a swing trader, if you want to be in and out in the same day, and this is the only time of the day based on where you are in the world. For instance, if you live in either North America or Asia. So for instance, if you live in New York, right now it will be, after this I'll be preparing to go to bed. It'll probably be 10:30 when I'm done. For you, it'll be 5:30. Right? Remember, Asian range starts midnight my time. That will be 7 p.m. your time and ends at 5 a.m. my time. That'll be midnight yours. So if 7 to midnight is a sweet spot for you, if that's a time of the day where you can trade consistently, right, then this is what you want to do. One quick second, everybody. This annoying little bug that's attracted to my screen. Then what you want to do is this. You want to find you a pair that is exclusively Asian, e.g., or Oceanic, AUD New Zealand. That's one of them. Another one would be AUD JPY. Another one would be NZD JPY. So the crosses of these pairs against one another, because in both Australia, or in all three of Australia, New Zealand, and Tokyo or Japan, this is 9 to 5 institutional business hours. In essence, the guys at the banks in those countries are awake and at their desk. And for you to look at NZD/JPY, you'll see that significant moves. For instance, here we had a 52 pip Asian session. Here you see the Asian session was bigger than the rest of the day. Here the Asian session was again bigger than the rest of the day. Here not so much, but still significant. 26 pips. Yeah. Okay, so this is a day where that wasn't the case. But you see that more often than not, you can do something significant with the Asian session if you are trading pairs that are awake at that time against each other, or currencies that are awake at that time against each other. So if that's the only time of the day you can trade on your scalper or an intraday trader, then you're stuck with Aussie dollar, Kiwi dollar, dollar Jappy, and those three pairs or those three currencies against each other. However, if you're like me and you like to stick to Euro USD, GBP USD, USD CAD, then you're better off using Asia as a significant level marker. Again, we'll teach you how to do this in more detail moving on, but you don't trade doing it. All right, I'm almost done. So next, London. London is the political and financial capital of the United Kingdom. It's also the clearinghouse of the EEA, European Economic Area. Notice that's different from the European Union. They're almost the same, but they're slightly different. Now, one of the reasons why Brexit is so contentious is there are negotiations as to whether or not London gets to keep its status as the clearinghouse of Europe. Boy, there's a... Okay, 1 second. Yeah, I made a mistake. I did a copy and paste, and I didn't copy and paste the rest of this. I don't have the time to find it from the other PowerPoint, so just ignore this side of the screen, okay? It's a copy and paste gone wrong. I'll correct that before I send it to the students. So, London is the financial capital of the world. Just write that down in your mind. London is the financial capital of the world, which is why 45% of all Forex transactions happen in the London session. That's the way it's always been. That's the way it is. It's unlikely to change anytime soon. Just accept it. And that's why the majority of the time, the high or low of a day forms in London. Please write that down. I'll do it for you. $65 to 70% of the time, the high of a trading day the high of a trading day will form in London's session. Don't ask me why. Don't argue with it. Just accept it or you will cry. It's like asking your parents, how was I born? The stalks, right? Some things are just the way they are, especially as a beginner. It will make sense as you grow, but for now, just take that in stride. London is the most significant session of the day. It's also the most volatile. It's the easiest to get wrong, but the most powerful if you get right. London session starts at 6 a.m. in the morning. Hence, my famous advice, take your trades from 6 to 10. Some argue it starts at 5. That's neither here nor there. 1 hour either way wouldn't kill anybody. So you always want to know what time 6 a.m. is in London, wherever you are. Or 5 a.m. depending on which you're using. I'm trying to be careful here because I don't want to give away too much on this video. There's some things I almost said something that should be for my students alone. But you want to know what time London is opening wherever you are. And as, like I said, based on London's daylight saving, every year we switch from GMT to GMT plus 1 and then back again. You need to know this is the time in London at 6 a.m. or 5 or something I don't want to say to you right now. But roughly around that time, that's what I'm going to say. In that ballpark, there's an actual time that is specific. I ain't going to give you here. But you want to know what time London opens roughly. Just write that down. And the first 3 to 4 hours of that time when London opens, you want to be stocking your first potential entry of the day. Why? Price will have consolidated in Sydney's open and for European pair again in the Asian session. And so the first expansion of the day will typically happen in London. Let me repeat myself. Because price has been consolidating overnight in GMT, Sydney and Asia, it's like holding back a bow and an arrow or pulling back a slingshot. Price get is allowed to run for the first time of the day in London. And like an animal that's been caged, run it will. Yeah, Kieran, I'm not a fan of the DST adjustments too. And especially as a trader, they can be very confusing if you're not careful in how you track them. Now, in London, and I cannot take credit for this. This is not my term. Again, this is one of those things I'm going to be honest and say I learned black and white from someone else. And when you see, the things I learned from another person that I refined over time myself. Those I will call my own names because I took it and I changed 50% of it based on what I discovered works best. There's things that I discovered myself from scratch. There's 0% of anybody else's work in it. Again, I'll give them my own names. If there's something that I borrowed and I lifted hook, line, and sinker from someone else, I think it's only respectful to give them their credit. And one of the ways you give them the credit, similar with the institutional levels, the big figure, the mid-figure levels, is don't change the name. Too much of this happens on YouTube, on Instagram, where people learn something from someone, repackage it, act like it's theirs, and don't give credit. And they change the name to something stupid. Credit where it's due. I learned this from a mentor. Gonna give it to you the way he called it. He calls it the Judas swing. The Judas swing because it is a traitor. It will kill you if you fall for it. Now, what he calls the Judas swing, I had already discovered as consolidation, manipulation, and retracement, but specifically on a daily premise. In London, he calls that manipulation that I discovered on my own on other time frames. He calls that manipulation in London the Judas swing. And now you know why I say what I say about starting the day. When the day opens and we come out of Asia, 6 to 7 times out of 10, you want to see a significant move in price in the wrong direction from the Asian range. On a down day, you want the price to go above the Asian range and find resistance. On an up day, you want it to go beneath the Asian range and find support. Kieran, of course you can. That's the whole point of me teaching it to you. I use it every day. I use it every single day. When I was giving signals for the last half of my last batch of students, and I'm going to start doing it again for you guys once you get to the point where you know what I'm giving. When I was taking those signals to almost the exact pip, this was one of the tricks I was using. If my daily bias is up, mark out Asia, wait for price to dip beneath it to where? To the first or second liquidity profile beneath the Asian range. There we go. That's the order block. Oh, that's Asia. That's the first one here. So this is the first liquidity profile beneath Asia there. Did we see a significant reaction? No, we did not. So you ignore that. Where's the next one? The next one is down there. Did you see a significant reaction? Yes, you did. You can do it two ways. You can wait for a 15-minute market structure break and jump in. Or you can go to an hour's chart and wait for an hour engulfing and then jump in. Either works. That's one of the ways I trade. Rinse and repeat. Rinse and repeat. Right? So, where were we? We're gonna spend an entire video looking at London. How London works, what happens in London, what you can expect in London, and when you should stay away from London. I repeat. Write this down for me. Write this down. Somebody write this down. What happens in London, how you can use London to your advantage, and when to stay away from London. Now, to give an example, today, you'll remember, let's see if I can find the chart. Right, it's my demo. Yeah, it's my testing demo. I'm just testing a whole bunch of stuff. So, you'll remember that I did. Oh, what chart was that? What was it? This one? Oh, was it this one? No, it wasn't this one. Was it? Yeah, it was this one. Right. So, see this trade that I'm in right now? Of course, this is my demo account. Yeah, Kieran, one of the things we're going to talk about. You see this trade that we're in now, my demo account that I framed? I gave it to you. Well, I told you guys about it while we did the morning session. And I told you, well, I took it both demo and live. Or one of my live accounts. I pulled out on the live account when this happened. When this happened, it came back. I closed it for pretty much zero. I actually forgot that I left it in on my demo. So actually, that's interesting. I completely forgot to close it on my demo account. So I'm still in the trade, right? So I can spend my demo money. Now, where was I? It was framed on the premise that before the day started, let me show this to you here. Before the day started, so this was Tuesday. Just going off Friday and Monday, we were expecting a down day, right? If we're expecting a down day, we want price to give us an entry above Asia. If I come here, this is Asia. So my entry was going to be above that black line. Now it went way above the black line, but the first, like I told you guys, the first hourly engulfing of the day, right, above Asia on a day I expected to be a down day, was my entry. There it is. That's Asia. First hourly reaction is there. That was my entry. Right? Cool. So that's London. And of course, 1 second actually, those are the trades as they stand. Those two trades as they currently stand. So yeah, if I'd realized I was still in this trade, I would have closed this. Let's see. So I was 2 pips away from closing one and 4 from closing the other. Well, it's fine. I still think that, in fact, I'm going to go on a limb and move this to here, because I think this was to close intraday. Since I've been stuck overnight, I might as well adjust it to tomorrow's levels. So yeah. High or low? Good point, Kieran. Good point. The high stroke low. Sorry, that's an error. Yep. So that's London. Finally, there's New York. Again, New York is when New York opens. So again, 6 a.m. in New York will be either midday or 11 a.m. in London. Try to be careful not to give away too much on this video. Okay, I'll give you this. Now, many times if you take London's move as a Fibonacci, you will find out that New York gives you a discount or premium entry. So if you cannot be awake during London, or like me, you just like your sleep, I'm usually up till late at night working on some stuff. And so I've just learned, let's leave London alone. Right? If I wake up and London has happened, it's fine. I can always get in doing New York when I'll be fully awake and fully rested. And so this here, 10 a.m. So that's 8 a.m. server time to here, which is 3 p.m. So that's 3 p.m. server time. So that's 1 p.m. So between 8 a.m. and 1 p.m., the swing that price formed gave a discount retracement that started New York's move. Half of the time, New York will be a retracement continuation of what happened in London. Look at it here again. That was the low of London. That high formed at the start of New York. You got a retracement in New York to 50%, and then it finished the rest of the day. Here, not so much. But actually here, the high of the day, and some, now the other 35 to 30% of the time where the high of the day does not form in London, it will almost always form in New York. Very rare is the day on a pair that is not an Asian or oceanic pair where the high or low of the day forms outside London or New York. 9.5 times out of 10, the high or the low of the day will form either in New York or in London. More probable London than New York. If it forms in London, New York should give you a retracement entry. Sometimes it doesn't, but most times it will. Or the high or low of the day will form in New York. And so I have just figured out now, just sleep in if you're up all night, look at your chart at 10 a.m. in the morning and get ready for New York's entry. That's how I trade. So for instance, today was an example of a day where the high of the day formed, well, just before New York, but it gave you 2 entries in New York. So that would have been 11 a.m. And actually, now that we are in daylight saving time in London, 6 a.m. New York is 11 a.m. London time. That's why I said you need to know what is the time. So when London's opening, wherever in the world you are, you need to know what time it is at 6 a.m. in London. You also need to know wherever you are in the world what time it is at 6 a.m. in New York. Depending on what session you're planning to trade or what you're stalking, you need to be aware. It's about to be 6 a.m. in London. Get in front of your chart. It's about to be 6 a.m. in New York. Get in front of your chart. There's some other tricks. I'm going to save them for later, and maybe just for my students. Now, New York is also interesting in this regard. Let's go back. Let me show you this on the slides. So, remember, actually, probably better to show you on the chart. So remember, Asia, quote unquote, Tokyo, right, starts at 1 a.m. Sorry, no. What? No. Midnight GMT. I need to correct that. Where did I get that from? 1 second. That's an, yeah. So I'm right. Yeah, cool. So, yep. So midnight GMT to 9 a.m. GMT. In essence, Asia closes roughly 9 a.m. in London, sometimes 10 a.m. depending on daylight saving. So when I say be in front of your charts from 6 a.m. to 10 a.m., I'm saying be in front of your chart in the overlap between London and Asia. Does that make sense now? Between 6 a.m. and 10 a.m. in the morning in London, which at the moment is 5 a.m. and 9 a.m. GMT. It's the end of Asia. It's the beginning of London. The Asian traders are packing up for the day, so they're entering or coming out of trades. The London traders are starting for the day, so they are entering or coming out of trades, and you have a high period of volatility. It's the Asian close. It's the London open. That is the first significant hour of the day where you want to be trading. Now, at 9 a.m., 10 a.m. in the morning, Asia goes to sleep. So 10 a.m. our time, they're going to sleep. Now, Sydney is starting also at 6 a.m. our time. Sydney is closing at 6 a.m. our time. So at 6 a.m. in the morning, Sydney shutting down. That's as they're shutting down, we're starting. And then for the first 4 hours of London, Asia is winding down while London is booming up. Asia goes to bed at 10 a.m. London, or the traders leave the office, in Asia at 10 a.m. our time in London. And so at that time, the London traders have had 4 hours, maybe 5, of significant trading. The Asian traders have left. The Sydney traders have left. The market goes quiet. It starts to middle around. Starts to give you a little bit of a consolidation. And then 6 a.m. New York, which is 11 or midnight, 11 a.m. or noon in London, depending whether we're in daylight savings. The American traders come on board. London traders are coming back from their lunch break. Or maybe just taking their lunch break. But the lunch break lasts maybe half an hour and they're back. And so everything starts up again. You now have 2 sets of traders in the market. And these are now the 2 biggest financial centers of the world. New York and London. Again, you're going to have high volatility and significant levels of liquidity that you can key off. Which is why we say, come back to your chart between, I say 12, but at some point in the year, it really has to be 11 and 3. Why 3? Well, at 3 o'clock at our time, 3 o'clock here, is roughly 10 a.m. in New York. They've had 4 hours of a run. By that time, the direction of the day is set. You usually miss the entry. Any trade you're trying to take there will be chasing price. It usually will not end well. There's the exceptions. Today was an exception. Today price would not go. It should have gone here, which would have been 2 p.m. my time. It refused to go. It finally went at 4 p.m. It happens. That's why I closed the trade early on my live account. Today was the one day where I'm like, man, I wish I'd stayed in. But usually whatever hasn't been set in motion by 3 p.m. London time ain't gonna happen. 3 p.m. GMT, ain't gonna happen. And then by 5 p.m. the London traders start shutting down. Right? They start to clear their desks. It's what I call, or we call, again, it's not my word. I didn't create it. It's been in trading for decades. It's called the London close. Right? It's called the London close. After that point, after London shuts down at say maybe 6 p.m., 7, the only people in the markets are now the New York traders until roughly 10 p.m., 9 p.m. GMT, when the Sydney traders come back in. That's when the spreads start going wild, because like I said, the beginning of Sydney, which is also the winding down of New York, is a time where market makers are assessing their options. They're figuring out what we're going to do for tomorrow, what are our plans, and all that weird and wonderful stuff. You don't want to be caught in the market at those times. So right now, it's not the time where you should be taking a trade on a European pair, except you're trading an oceanic pair. Also, look at this. Can you see that on a 1 hour chart? Can you see that gap? See if I can show it to you. Can you see? Price closed there, but it opened a good Okay, in this case, 1.5 pips lower. There's times where that gap can be 5, 6, 7 pips. The Sydney traders have just come into the market. This, in essence, if I was going to get out this trade, I should have gotten out before. Now I'm kind of trapped. Let's see. How many pips have I given back here? 16 pips. At this point, you might as well ride it through if you think you know what you're doing. Or just close it and say I missed the boat. I'm going to ride it through because I think, again, once a demo account, 2, I think we've got a bit more to go tomorrow on this move. So, I'm going to stop there today. I think I've given you plenty of food for thought, haven't I? Plenty to chew on. Go watch this video again. It's all starting to come together now, isn't it, guys? These are the pieces of the puzzle that you put to take your trading to the next level, to become a market breaking trader. I am going to shut it down there tonight. I am not taking questions in this one. Go sit on it, chew on it. Students, ask the questions on Telegram. Everybody else, what's this Telegram he's talking about? Well, first of all, let's do it this way. £79.99 a month. You get access not just to what you see here on YouTube for free. You get access to this course program. Most of it already live, some of it in development or just about to go live. This is our weekly schedule. Some of it is on YouTube like today. Some of it is private. This is our schedule. You get all access to the full and, of course, hands-on mentorship, one-on-one sessions, the ability to ask questions, share your results, work through trading plans together, have a shoulder to cry on when you go through the emotional ups and downs of trading the markets. All that for the price of what to some people is not even a fancy dinner. How do you get your hands on that? Well, I'm glad you asked. Send an email to us at israelkeysgroup@gmail.com. Send an email with your details saying you'd like to find out about registering. We will send you an information pack. And hopefully you like what you see. We'd like to welcome you on board. You can also get in touch with us via Telegram or Instagram on that number. And we would look forward to getting your inquiry, adding you to our family of budding traders, and help you take your trading to the next level. Take your trading to the next level. All right, guys, I will see you tomorrow, 9:15 in the evening. That's going to be a closed session. So it's going to be exclusive to our registered students on Zoom. To everybody else, please like, share, comment, and subscribe. We'll see you back on YouTube on Thursday. Take care. Bye-bye.